I think we still have, this room probably will get gradually filled, but I know 5 p.m. generally is not a great time where we can try to keep everyone glued in this room, but I will try to make sure that with the audience that we have, we will try to make this session as interesting as I possibly could. So I need to work harder, but that's also a challenge, especially when you have been driving since about 3 hours in Mumbai. So I think the traffic situation and road conditions is a topic which is also worthy of a very nice conference that can be set together. And I can tell you every participant probably will have an idea on how we need to improve the situation. But nevertheless, I think today we are here for a different purpose. And I have a pleasure of moderating this very interesting session from two perspectives. I think one, if we look at the timing of the topic that has been chosen, I mean, it cannot be at a better time than this, especially when we are seeing globally what is happening. So both from an opportunity perspective and challenges, the session today is going to be very interesting, and I'm sure with the panelists that we have here, we will probably try to extract a very interesting outcome out of what exactly is their perspective on the current geopolitical situation, as well as a lot of stories on this buzzword called tariff that you must be seeing every day nowadays in the media. So before we start, I would like to just set the stage and give you about 3-4 contexts which actually help us to continue the conversation forward. So first of all, I feel when we look at the situation around chemical industry at large globally, geopolitics is going to play a very, very important role in next few years, I would say, not months. And this has got certain reasons. So one, if we look at the current state of global chemical business in West, it is weak. We have realized that most of the large chemical companies which are based out of America or Europe have already been reporting single-digit bottom line numbers, and some are also negative. But the problem is largely driven by domestic consumption in these geographies, and this also gets a little bit compounded by the fact that in our neighboring Far East, the situation is also a bit weak. Therefore, it is all the way more reason for companies to start competing in different directions. And when you do not have favorable markets like Europe present to send the material, obviously the natural choice is to attract into less preferred markets in their terms. And this actually presents a very interesting supply domain perspective as far as next 24 months is concerned. The second part is largely about tariffs, and we have seen significant amount of turbulences, especially with recent announcements in US. But this does not only impact India, and I would say the impact is there, but I mean, we will see how it gets unlocked. But I can also, I also feel that, you know, I mean, when we look at our industry, probably it's still blessed. I mean, I was just thinking about while driving today that it's only very interesting to see what supply chain head at Apple or Samsung would be doing right now. Because imagine in last 36 months, there has been a lot of planning on moving manufacturing of mobile phones and whatnot to India, to only realize by one stroke of pen that there is an import duty to an extent of about 25 to 50%. And then at the next hour to realize that no, now it may go down and up. So I think every day is a heartbeat. And from that perspective, the life of supply chain is certainly not easy. The third context, which also is very interesting and an opportunity from our perspective, is to look at the entire paradigm around demand consumption. So there is gradually a significant amount of shift which is coming into emerging markets, and largely driven by Asia. And within Asia also, India presents a very, very unique opportunity right now, which is also for the fact that the domestic consumption here is still very robust. I mean, there are certain industries within the specialty chemicals material where we still see about double-digit growth happening, and that actually places us in a very interesting position and also helps us leverage from that perspective for an Indian chemical industry to look at opportunities not only domestically but also because of scale, go out. The only two important conditions that need to be met from my perspective, I think, is competitiveness, how fast we are able to execute, and the third and the most important part, especially for next 24 months, is how well the organizations and the chemical industries are able to differentiate their portfolio from rest of the world. So therefore, just to bring our focus into these 4 points that we have discussed, I feel that we should try to figure out today how Indian chemical industry can seize this opportunity and create a positioning where we should be a potential winner, let's say in about next 24 to 36 months. And most importantly, how should we also shield ourselves from whether it is geopolitical, logistics, or regulatory turbulences that we are seeing coming from different parts of the world. So with that, I would like all of you to welcome the perfect panelists here. I think for the topic that has been chosen, they're the best panel to answer most of these questions. And I would like to welcome Koshal, Ajay, Vineet, and Mitesh to the panel. Thank you so much for your time. And let's dive in. So first question, which I would like to ask all of you today is to give a sense on what, from your perspective, is the biggest supply chain disruption that you have encountered in last 24 to 36 months, and how have you handled such a situation in past? And it's a random pick. Anyone who feels comfortable can start.
Yeah. So I think if you see it last couple of years, in chemical sector, if I'll keep a domain in chemical sector, particular to our type of industry, then the Russia-Ukraine war, I think, which is really disrupted a lot in the people who are really dealing with the chemicals which being imported from Europe, and is particularly from Russia, Ukraine, and other countries. I think for us also in domain of where we deal in precious metal and the chemicals associated with that, Russia-Ukraine war has hit it a lot. And not only in there are two front of it. One is the logistic time, which has gone up to from 30 days to 45 to 60 days, and also the cost of the material. I think it has gone exponentially, and then the lead time of getting material. We have to keep an inventory, which earlier is to keep it for a 3 to 6 months, has gone up from 9 months to 12 months, and where you don't know about your customer order even for 3 months, and you have to keep inventory for a year. So that is where I think the biggest challenge is there for disruptions.
Koshal, you want to go next?
So, nowadays it's a buzzword, and that is freight, right? And especially when we talk to the business team, and I fortunately play a role in between the business, the supply chain, and the finance. So that becomes very critical. So what happens is, last 12 to 18 months, I would say there had been several issues, geopolitical issues, war, the trade shift happening, the US is talking about change in tariff, so many things. So the situation was same for us. Asustanal is stopped because of the war again. So these situations were, these are very practical cases which happens in everyone's life. And we as a chemical organization, we always try and believe that we should have a long-term contract. You try and believe in getting the volume discount, blah, blah, blah. This changed completely this time. We realized that even 3-month contract is not making sense for us. And as an organization, if you say around 40% of our volume is outside India, a lot goes to the LATAM, it goes to Europe and also in Asian countries. So we changed the strategy and it was kind of overnight. We said, now nothing 3 months, 4 months, 6 months, it will be daily. We adopted a tool to help of digitization. Quickly, it doesn't take much time. We started bidding on daily basis. And frankly speaking, I would say that it has helped a lot, to keep in pace to what is happening in industry. We were opening it up even for 15, 17, 18 forwarder to come and sort. We were even inviting shipping lines wherever possible, wherever they were interested. Now there is reverse side to it. What happens is, when you go and talk to sales guy, you will go and talk to the competition and he'll say, hey, your freight is 2,000, whereas, he's sending it at 1,700. And then again, as a supply chain professional, this challenge comes back, where you have to again manage the challenge status of your own team. And they will not understand. For them, it is very simple, $300 more, the how to manage that. With this, the daily bidding, with the transparent data, we said, this is what we have. And if you have something which our competition is doing, can you bring certain fat to furthermore improve? Now, this is internal. Another important aspect which we observe is, we ultimately, any amount we spend, we charge to customer at the end. We said in this particular period, why don't we change our strategy? In place of keeping the fixed freight at the time of quoting, we said no quotation no quotation with freight. We said whatever happens on actual, let's build in. And it was much more appreciated. Then the third aspect, as Mr. Ajay said, it's about the lead times. It increased by almost, I would say 25 to 30%, especially for the Western world. There also, we had the dialogue with the customer. We told them the situation. They also understand it. And then the most important thing which we requested them to do is reposition their inventory situation. Think of their safety stock. Look at certain situations which is beyond our control. And I would say that, with the transparent communication with customer, talking to the external logistics partners, making their internal team understand, that the situation is sometime beyond our control. What we can do, we should do. I think this situation was very well managed. So this is one of the good takeaway which at least I was sitting in, be it a business meetings or SNOP, where this was a talk of the town for that point of time.
Oh, that's very interesting, Koshal. And I think everyone in this room, whether it is from a business perspective or supply chain, freight, Suez Canal, Panama, these are some areas which have given sleepless nights to many people here. And Vineet, how do you see this? I mean, has freight been bothering you a lot, or there are other challenges? So
we are no different from others, because definitely once we talk about supply chain, so it is, whether it is downstream or upstream, challenges are going to be similar. Once there is crisis in Red Sea, then definitely you are going to backward pressure how you are going to continue your productions, because your entire cycle, whatsoever movement was happening within 40-45 days, it went up to 90 days. And same, once you're in this thing, especially into this chemical supply chain, so your pricing are more on a input basis. It is not on the basis of value addition. So your entire chain, value chain, is, because somewhere around 80-85% of your total cost is on your raw material. So once you are doing any upward or downward movement, so entire value chain is get impacted through that. So what we did, because once this Red Sea crisis was there, so we recorrected our inventory norms so that we can just sail through these disruptions. Over and above what we did, and even though this was not from the initial this thing, we were working from last 4 or 5 years, how we can make our planning part robust, so that we can sense what are the upcoming challenges and we can prepare ourselves well in advance. And that also pays us well, because till that time we get matured. Once I'm talking about we have just recalibrated our inventory norms to recalibrate this transit time. So we were capable enough to do this on a this thing very shorter time. It was not because tool was there, even though the logics were there, only and only we have to recalibrate the transit time, and output was in front of all. Not only the output, the impact of output was also with us, so that we can take a conscious call whether it is, because ultimately this is working capital, so whether it is going to add value uh, by opportunity, or it is going to add negative point by adding inventory within the entire system. So this all was during the initial phase, and whatsoever we are doing from last 4 or 5 years, so it is now paying off. Again, the raw material was this Ukraine-Russia war, and before that this Iran sanction. So ammonia, because we use ammonia as a key raw material, it went off from the market. So we just did a backward integration. Now we have this 60-70% of raw material from the in-house production. This is also making the entire process more sustainable and more streamlined to fulfill the requirement, less disruptions from the global perspective. And good part is because in the initial phase it was the downtrend, but now market is picking up. So whatsoever investment, whatsoever actions we have taken within last 36 or 48 months, so it is now again paying off.
And Mitesh, your perspective, I think it's very interesting what you said, and I've got a follow-up question on that as well. I mean, it's largely around how have organizations been able to pivot, and I've seen a significant amount of creativity, which we as Indians are very, very good at. And therefore, I would like to just move back on one of the follow-up questions. But let's first hear from Mitesh. What is his view?
Sure. So I think you speak of 24 to 36 months. I think it's a new challenge each month over the last 3 to 4 months that we've been handling. So I think the perfect transition has happened from VUCA to BANI, and I'll use these acronyms to probably share examples of what all occurred. So B for brittle, supply chains from volatile have now come to a stage where tomorrow you don't know what will happen. With Operation Sindoor, we have our factories very close to the Kandla port, and suddenly one fine day, it's like everything stopped. The port operation stopped, electricity is cut off to the manufacturing site, shut. You can't plan for this, you can't react, you can just wait and watch. How long is this going to continue? And frankly, you can't answer to customers what is going to happen. You don't know how long this will go on. The second is A for anxious. I think anxiety can be perhaps put up as the word of the year, as Donald Trump continues to tweet and share a new update almost on a daily basis. It's the rest of the world which is trying to figure out and see what will happen. But I've myself found myself literally scoring through Twitter, trying to find out what will happen and how should you sort of make sense of it, how should you react. And frankly, there is no right answer. The third is non-linear. I think who would have thought that Russia-Ukraine war is going to lead to so much of a increase of business to the Middle East? It's not so logical, right? You could not think of it that ways. But the good thing was we were lucky in terms of setting up a subsidiary in the Middle East at the right point of time, and now therefore being able to utilize it to do much more business. But frankly, world has come to this where we buy a lot of sulfur, and we were asking our sulfur suppliers, when everything else is down, when the markets are so low and generally demand is struck all across the chemicals, why are sulfur prices so high and going up? And then they were like, Indonesia has started mining much more. So, something happening in Indonesia leading to increase in sulfur prices globally, and for us, mainly the Middle East, India. So, such non-linearity, nobody could predict this would happen. Just last year, sulfur prices were 1/4 of what they are today. So 4 times increase. The final is incomprehensible. And frankly, again, recent events that happened with the Red Sea crisis, with the Iran war that happened, just on the day that Iran announced that, they are also getting ready for a counter attack, frankly, there were a lot of assumptions on now this is going to escalate. From a bipartisan conflict, this will become more of a regional conflict. And frankly, a lot of people bought a lot of commodities which were connected to Iran. Methanol is one prime example. So a lot of trades happened during that entire weekend, and the Monday, Iran announced that they are going to escalate. And then suddenly, the next day you realize that the war is over. The escalation was just sort of, to save their face. And the war is over. Prices which went up 30% crashed 30%. And only, it's not even been a month that this crash of prices happened when suddenly, out of nowhere, US put 6 Indian companies on the OFAC sanctions list. So this has happened after a very, very long period of time. And even while there is a supposed truce with Iran, now India is the target. So what was happening for more than a decade, where Iranian material used to come to India, suddenly they have chosen some companies, put sanctions on them, and again we are back to plus 30%. So, so this was early June, 30% up, by end of June, 30% down, now again plus 30%. So this is how the markets are moving, and frankly, we need to really change how we work in this kind of a bunny world.
Thank you, Mitesh. And Mitesh, yeah.
So, as Mitesh said, Uncle Sam used to say something morning differently, in the evening differently. And recently, what has happened now, this news is also in the market, they are thinking not for direct purchases. They are looking to add some tariff for the value addition suppliers or value addition purchasers. If I'm purchasing anything, not directly from Iran, if I'm purchasing anything through via, if I'm coming into the value chain anywhere, then also we can come under the radar and into the sanction. And again, nobody knows what is going to happen, but you have to prepare yourself well in advance. If this is going to happen, what and how you are going to react. If this is going to happen, what and how you are going to react. And if you are not prepared to make these scenarios and what if studies, then because you are going to make 10, 15 odd scenarios, nobody knows whether one or anything may be used or not. But you have to make, because you have to make your business sustainable, you have to cover up if anything goes wrong. So at least not only you are saving interest of the stakeholders.
So Vineet, since you're on the microphone, so I'd like to hold you on that topic as well. I mean, I think I've written a few points. So we talked about tariffs, we talked about inventory challenges, we said it's freight, we said there was Sindoor and that actually created disruptions. I didn't actually imagine about that. Then you have RM prices, you have Suez, you have Panama, and then you have geopolitics and other logistic issues, right? And if we look at an ecosystem of a classic chemical company, right? I mean, this is a classic storm, right? And I think it is not only about strategizing. I think someone mentioned about that. It's really about today and then tomorrow, and then also having a view for next year. So that actually brings to a very interesting point on how would an organization define and design their playbook? Because generally, from whatever we were taught, that your playbook is 5 years, and then that's how you plan your journey strategy around it. But in the context of the current situation, how have you navigated in your organization on for these fundamental challenges? And if you can just give one example of what pivot you as an organization from Deepak made to ensure that these navigations are done perfectly.
So as far as playbook is concerned, so we used to create our playbooks, and even though within the last 30 years, don't judge my age. Okay, so in the initial days of my life, once we used to create our playbook for the entire function, because in the starting phase, I used to create my playbook for the function, then for the greater good. And currently now we are making for the entire this supply chain. From a perspective of business, within last 10 years, in the initial phase, we used to make, and revision used to do after 2 or 3 years. But within last, say, post-COVID, we are revising it almost every year, because whatsoever we are planning this year might not be relevant the next year. So considering this, this is on a organization level. So what we decided to deal with this challenges, because this is going to be the way of life, because sustainability is not how we are going to deal with the disruptions. Sustainability nowadays, by means of the supply chain, how you are going to convert the disruptions into the opportunities. Okay, and once on an organization this thing perspective, so we have taken 3 key major initiatives to deal this in a larger this thing roadmap. So one thing is that we have diversified our strategic sourcing. We all know, because we love it or hate it, China is something, we cannot think business without having China. But nowadays, you have to have a strategy in place how you are going to make your dependency lesser on China day by day. So this is what we have decided, and even though we are doing this also, and numbers are also saying the same story. Recently, at a very fine day, in the last of May, Kharif is the main season here in India for the fertilizer, China said no to India. Yeah. And this was because we were well in place, because we as an organization decided we are going to diversify our strategic sourcing. So it impacted, but not the way it should as an organization. So this is what we have decided, we are going to diversify our strategic sourcing. The second thing is, we have decided as an organization, we are going to invest heavily on digitalization, creating capability in digitalization as well as in analytics. And why we doing so? Because I'm remembering my days when I used to do planning, because in the initial phase. So me and my manager used to discuss that let's make this scenario. If we are going to drop prices by 5 rupees or 10 rupees, or we are having this inventory, what pricing we should decide so that we can reduce this inventory by this. And if we are discussing this in the starting of the month, then I used to make this scenario, I think after a week or so, till that time, the scenario was not of use, because the entire philosophy used to get changed. But nowadays, these all scenarios, what I'm talking about, this is just on a click away.
Vineet, just I'll digress on that point. You know, it's on the first point, you made a very interesting observation, which I've also been following quite closely, that, and maybe this question is also to Koshal, Mitesh, you can pitch in. So we talked about this alternate sourcing examples, but largely when we look at the bottom line shape of the business, it's very hard for you to design your sourcing strategy as well by saying that I want to expand. And that expansion will obviously come at a cost of some basis point of bottom line getting shaved off. So what kind of a choice as an organization would you make, for example, Koshal, in defining that it's okay, and or is it not okay? So is it a dilemma, or you look at it in a different way?
I'll tell you certain real scenarios, you know. Not only the place where I am, even in past I have seen. We have managed supplies of several raw materials with the single sources in years, I would say decades. And suddenly when the time comes like this, you realize you need to have 2, 3. And when you start hunting 2, 3, you understand that there is only one supplier.
Yeah, exactly.
Imagine, these 10 years, even somebody would have thought to develop a product, right? Everything can be done if there is an intent. Now, when you start doing it, see, it is always about the balancing that in my view. Strategic sourcing is not for ABC, it is for A. B should be moderately managed, and C, frankly speaking, any organization shouldn't be thinking too much on cost, because it is 5% of your portfolio. Even if it doubles, and frankly speaking, the effort which goes to manage C class, I'll tell you it is 85%.
This is the most, yeah.
Very simple. Don't look at, I'll say, the small pieces. Look at the bigger picture. And this has been, I have seen myself, I've been in supply chain, been in business, I have seen this, it happens. And I have seen businesses taking all saying that I'm okay getting into an annual contract, be it 10% higher. I'm okay keeping C-class item for 6 months if I have got, larger self-life. And then all the resources which ultimately getting into this, they were throughout on the strategic part. For A-class item, is contributes 80%. And that works. And the moment, if it is supply chain puts fat forward in front of the management, I can very openly say management is also not full, they will accept it. Yeah. And this happens, that's the reality. It is just that somebody should take effort to bring the analytics, bring the data, put up the fact and say, hey, this makes sense for me. So this is my take on this specific point, being into supply chain and worked a lot on this topic.
Oh, that's interesting. And Mitesh, for you, if you look at a global export-driven business that you have, how do you see that situation? Because you have to see both the headwinds and tailwinds associated with this kind of a situation. And how would you pivot, for example? I mean, have you encountered something similar that Vineet was talking about? And what has been your pivot as an organization at Aarti?
So I think at Aarti, we've frankly had and continued doing our long-term planning. But at the same time, given the scenario that we are in, we've also brought much more focus, additional focus on what we do to the month and the quarter. So, we have mechanisms in place now to look at the start of the month, whatever was the plan on a weekly basis, is that being met or not? And then the supply chain is fully empowered with all the data. So everybody speaks the same language. The language is based on what is the target profitability, that we'll have at the start of each month. And each week, the supply chain will sit with the sales team, with the procurement team to ensure, the weekly level targets are met. So, and in doing that, whatever is necessary, we've been able to sort of do. So nothing has been, off limits. For example, the consumption of aniline in India was about 150 KT annually, total Indian market. This year we'll be consuming 200 KT. 3 years ago it was 150 KT for the entire Indian market. So we've moved into a territory where nobody else has experience. Today all the suppliers who used to bring aniline to India, frankly, have never handled the volumes that were required to handle. And we've had to innovate.
But
so we said last year...
That's a good problem to have, right?
Of course it is. But it's also a challenge that now you need to solve very differently. You can't tell the same supplier, now you increase, now you double, now you triple, now you quadruple. Because the set of sources that you had sort of no longer are able to manage the supply chain. So what we had to do was, last year, we've been able to work with factories in China. China remains like the destination where you can get whatever you want in terms of the volumes. So we've started from the factory, moved material from the factory to Chinese port in rail, from Chinese port to India in bulk tanks. So we are actually one of the first companies. Not a lot of traders also have managed storages in China at the port. So we've been able to do that, bring the material here, and then from the Indian port, take it to our factories. So taking more control of the supply chain. At the same time, we also diversified. So we said China cannot be the only source that we can do. We went to Europe. And Europeans had a lot of resistance saying we have the product, but we don't want to do anything else. So you manage the supply chain here also. And we said, okay, we'll do it. Sitting in India, we've been able to manage the entire movement, ex-Europe to our factories and so on. So I think growth brings up new challenges, and then we've been able to handle and solve those.
And it also is a very interesting dimension actually in the current context, because if you look at China, I mean, especially since you talked about aniline, it is still relatively consumed there compared to what would be the situation in Europe. So though the common belief would be that at Europe it will be a notch up, but do you see the situation getting even keyed right now between China and Europe as far as supply situation, availability, and also competitiveness is concerned?
Yes, and the situation has sort of become much more dynamic because of the US angle and the relative tariffs that have become different. So trade flows have continued to change over these last several months. So I think each month we are guessing, and frankly today I cannot claim that we have a perfect sourcing strategy. Frankly, we know a lot of sources. What we want to ensure is we manage the relationships and we ensure we have the access and the first right of refusal to wherever we want to go and buy. And at the same time, when we have these conversations, the suppliers also are mature. So there are periods when we were reviewing this data, US used to be probably 15% of our basket or 20% of our basket 3 years ago. Now it's come down to 0%. With the entire change that is happening, we expect US will consume much more of the product domestically, and there will be no trade flow happening from US to India. So yeah, things like these continue to happen.
Sure, thank you. And Ajay, I was going through your company profile on Hindustan Platinum, and you have a very, very interesting business in multiple dimensions. And sometimes when I was just going a little bit deeper, it sounded very attractive and interesting as well from the surface, but I'm sure what it takes to manage such a situation is not as easy. So I want to hear from you, how have you been able to navigate the situations that we have been talking about just now? But importantly, I think for your business, Ukraine has been a very, very interesting challenge that has come about, right? And then also the other situations that we are seeing also are around tariff piece. So what is your perspective, and how have you been able to navigate? And do you see it as a challenge, or it's an opportunity in the business that you run?
See, when I think while listening to all the forecast basis, what for us it is in the precious metal domain, it is not only the inventory level of day, month, and on years, it is on AM and PM basis, like early morning and late evening. So our planning on the precious metal is on those bases. Then when it comes to a different type of, because we have a different business unit in which we operate. We operate in different dynamics of chemicals, with different dynamics in the precious metal in other chemicals. So it all depends upon the type of material what we use it. And as I said, in precious metal domain, you have different dialogues or different parameter to set for your whole supply chain network. So as you said, Ukraine, Russia is one of the prominent thing which has made the whole world volatile on the precious metal, because all of us know that platinum as a raw material, as a product, being sourced from Russia primarily, and then from Africa and Australia. So that has made a lot of volatility in the market. Once it was a year back when platinum prices has gone down less than the gold prices. Again, it has come more than the gold prices. So you can imagine the volatility of the nature of this product and how to forecast, how to keep this market intact, because we are making a product out of this precious metal, and your customer base are in different nature. Some are in the pharma industry, some are in the fertilizer industry. So, and they have their own forecast basis. So one part is the precious metal, another part is their pricing structure. So how to cope up with that market to complete. So that is where I think what we do is, I think the maximum thing is that what we do, a hedging part of it, one part on the precious metal. That is, I think every industry in precious metal does it. We are also do the same thing. And secondly, for all other materials, as I said, I think we do the sourcing based on the capacity what we require, And to need the market, right, we access the market very closely, monitor the market from which market source we get this material, whether it is from Europe or from Asia Pacific or from Australia or any part of the world. And then we do an inventory planning depend upon that. It all depend upon the type of material. So we do deal in various segments of markets. As I said, it is an analytical context. We have a lot of challenges over there because as one of the raw material there, which now currently being used in a lot of semicon industry. So we have a challenge over there, how to bring that material, how to source it, because maximum things is going into the semicon industry, which India is flourishing right now. So how to deal with that? And we are dealing with that changing a source, right? I think sometime back we were talking about a single source. So we are also dealt with the same thing. We were dependent upon totally on one item on a single source, and we are forced to now go but at a source of the like alternate source, double source, alternative 3 or 4 sourcing. So that is what currently we are doing it. I think every day is a challenge for all supply chain people, including us. I think the world is so dynamic, and then we have to live it with that and take decision as it flows, goes it. Because ultimately, the bottom line is that the ROI, which need to be there, because we are part of responsibility to for the management for the organization. So I think ROI is the bottleneck, where bottom line where we need to ultimately has to have all the result oriented.
Thank you, Ajay. And I was just tempting myself, but maybe I will ask this question, Ajay, now. So the billion or $1 billion question is, should we invest in gold, silver, or platinum?
So yeah. So even for this audience, even I don't invest in all these metals, right? So it is very difficult to answering the question is very difficult to predict. Even we have our own platforms where we sell in the e-billion platform, but it is very difficult to predict the market. Like as we guess about the gold in the market, so even I don't know tomorrow what is the gold rate, what will going to happen. So it is as mark of the things in the market as anybody can predict.
Thank you, Ajay. That helps. And Vineet, I just want to come back to you. And you were giving a very interesting example on how, as a company, you have been able to shield yourself, especially with the situation after it emerged in Russia, but also recently what happened with Chinese decision on fertilizers. So, besides protecting yourself, do you also see such situations present an opportunity for you to grow your business, forge new partnerships, or it's more of headwinds, less tailwinds?
Yeah, definitely. As I said in the starting, sustainability is not how we are going to mitigate risk. Sustainability in current scenario is something how we are going to convert the disruption into opportunities. So in our case, this information is available on open sources. We have done this long-term agreement with Israeli company, and we are looking for more such kind of a partnership. So we are seeing these disruptions as a opportunities, and we are converting. There are some things which are available on open source, so I can share. There are something which is behind the scene. I cannot share it. But yes, we are taking these things as an opportunity. And the same, because the backward integration of our own this thing. Otherwise, mostly business houses invest more into downstream rather than the upstream supply chain, because it is always suggested you should be a balance of insourcing and outsourcing, and upstream is always believed you should outsource it because that is not your key area of expertise. But we have invested considering the future prospect and the business sustainability, and that same we are looking in other areas also.
Thank you. And Koshal, if I can just come back to you, and you have a pretty diverse spread like others in terms of your business, right? I mean, domestically as well, and also about 100 plus countries, regions where you would be exporting. So, so we talked about a lot of disruptions and how we are seeing these opportunities. I have two questions which are quite similar in nature. One is tariffs. They are presenting a very interesting opportunity, think through for organizations to look beyond a very creative mechanism on how should I operate. So is the way of operation going to remain produce in India, sell in US or Europe, or is it to strategically redefine your operational footprint so that you get closer to the geographies of interest and are still able to get back source from India and front conversion there. So what's your view on such a model, which many companies are in fact looking at right now, especially China? They have already expanded it in that manner.
So for us, the situation is a bit different. Okay. So when we talk about agriculture, so we are a lot fungicide company. So we have a product called Mantojeb. So there are only 4 suppliers in the world as of now, and 3 are from India, and that contributes to more than 85%. So eventually, it is not going to create too much of issues for us, frankly speaking. That is manageable. We will continue to produce in India, and everybody is producing here. And product is such, it is the industry is highly regulated. So this is generic product, but running since 60 years. Still it has its own FHSC. But expanding it, be it in India or catering to US market, is still a thought which everybody has. Not able to conclude. Moving to another business or another geography where we have other product which we are planning to. Yes, we are thinking of expanding our manufacturing footprint beyond India. Tariff is something which, frankly speaking, it is today. You never know it will be there after 1 year or not. So if somebody take it too seriously today to put up CapEx investment, keeping in view the tariff discussion on in today, my personal view, we should wait and watch. Very, very important. When it comes to us, our footprint design is happening basis long-term view, not really distracted too much with the tariff things happening right now. We have another business which we call it innovative solution, where we participate in textile, sotin, paint industry, leather, textile. So that business is something which we see a lot of opportunities across the globe. And we see everywhere opportunity. And it is purely a price game, only a price game. And then you provide technical service, nothing else. So this kind of product, do not too much really think of these disruptions happening. It is just an opportunity you find out. If you are able to sell it there, do it, or else come back, do something else. So it is very, very evolving the strategies, I would say, or it is not a strategy, it is short-term actions. Sometimes you have to take. It is not always that one should think of long-term strategy. I would say today long-term is not even 3 years. Short-term is 1 month. 3 years before we were talking, 1 year is what short term, now it is 1 month is short term. Sometimes it is 2 days. When you have to take a call if I have to buy it or not. And these are realities. So we need to understand the word agility, the word resilience. I think these are the real time when we need to use it. We had COVID 3 years before. We had geopolitical issues, the wars happening left to right, right to left. And now you have issues of this trade war, which is, I would still say a trade war. I don't know what will happen. So this time, sometime we need to sit back, relax, wait and watch, and then we should take long-term action when it comes to investment. That's my take, personal take.
Makes sense, makes sense. And Mitesh, just an extension to that question, and also to add upon that, we've been talking about China plus one. I have my own views on that, but I'm not a speaker today, so I'll reserve that. And then there's also a very interesting concept which has just come in recently called friendshoring, right? And then we are looking at organizations globally looking at disruptions and saying, no, probably we need to go outside China and figure out alternate geographies where we should start collaborating with companies and buy from them. And when I was also reading a very interesting article about Aarti, which is also probably something that you mentioned in your annual report about the golden era of the chemical industry in next coming years, especially with these opportunities that you foresee elsewhere. So one is, what kind of opportunities, size, and do you really see this as an opportunity from the shift of how the manufacturing is moving from different parts of the world? And do you think India is really ready as a true alternative, not only to China plus one, but otherwise being able to capture this business? Because I am also very keen to learn from you that we are talking about being a $200 billion size business today, and I think we are talking about in the next 14, 15 years will become $1 trillion. So that's 5 times a jump, and I don't think it's only going to happen from the domestic consumption, right? So what's your view?
So, few concepts that you packed into that, and probably I'll address each of these in that order. What is, I think, probably for the Western world, China plus one, but in reality is also Europe plus one, Japan plus one, that we need to understand how the chemical industry moved. I think if you look at the history, a lot of innovations happened in Germany. And especially the world wars were the impetus where, innovations happened. A lot of these, the big five, IG Farben, were set up between the world wars, broken down at the end of World War II, and a lot of technology moved to other European nations. It moved to the US. In the 60s, this technology from the West moved to Japan. So that is the first time it came to the East, and then the other Southeast Asian countries followed Japan. Also India and China. India, of course, grew much slower than China, though they both had a concurrent start. So this is how the industry has moved, frankly. And if you look at the next 10, 20 years, then this shift will continue in the direction of Asia, Southeast Asia, India. So in that order, this is going to continue. However, we should at the same time continue to look for opportunities wherever they occur. So we don't say China is a competitor. We also consider China as one of the markets. And very recently, in fact, this week, with the entire US tariffs situation that was happening, one of the key products that we sell to the US, this is the first time that we decided now China also is something that we'll consider. So even though there are Chinese manufacturers, we've been able to move this and we've been able to sell in China. So I think it's finding opportunities wherever they exist and then converting them for yourself. So that is what we follow. The second thing, friend-shoring, etc. I did probably 10 years ago when I was at EY a lot of work in terms of shifting services. So those were global capability center shifts that used to happen. So the Europeans would typically try to first do it in Hungary or Poland. So they were like, this is closer, at least I'll move first here. Then the next step would be to move it to somewhere in Asia. And then within Asia, we used to do these lot of studies comparing Philippines, India, Malaysia, and where should they set it up, and so on and so forth. So I think that happened probably quite some time ago. What we are seeing right now is probably, and that was actually the phase of globalization. Last 2 decades or more, the trend continued towards globalization and finding basically wherever it was the lowest cost to produce or the lowest cost to service, getting your stuff there. And now definitely there will be some reversal in terms of deglobalization, in terms of creating all of these capacities again closer to the markets that you serve or closer to critical feedstock. So today there are basically chemicals that you cannot produce in India because the feedstock available in the Middle East is so much more cheaper than India. I think just because you are a company from India, you should not push yourself and set up manufacturing in India. At the same time, I think whatever is happening in the US is not new. The tariffs started in the Trump 1 era. And if you look at the entire trend on China, at least they've been there for a while. At the same time, also India pre-2019 used to have GSP. So India used to have zero duty to the US. And the GSP was actually taken down. So US took one step in terms of not giving preferential status to India several years ago. Now they've moved further. So I think the trend towards deglobalization is clear, and therefore our need to also sort of react to that and shift the way we think about manufacturing is something that is imminent. So yeah, one is China as a market. China will remain the largest market for chemicals. So not just competition, you'll have to consider it as a market. And I'm sure, we have to aspire to do as good or better than the Chinese in terms of costs. And I'm sure that is possible. In fact, a couple of the products that we manufacture have anti-dumping duties in China. So sometimes I feel proud sharing that that is also possible. So yeah, this is what my thoughts are.
Thank you, Mitesh. And just hold on to that. Just one question as an extension. So, according to you, next 2 to 3 years, I know right now the situation is only next day, but I'm sure that evening, once you have time after navigating through the daily turmoil, you would also look at future. So, what is that one important capability that you feel is going to be extremely critical from a chemical industry perspective to remain resilient in such scenarios, but also to leverage opportunities for the future? Let's say next 2 to 3 years, if an Indian industry has to create a specific capability, what would it be? Just a short answer.
And I'm not just saying it because it's a buzzword today, but it is definitely AI that we've already started investing in. So we have organization-wide subscriptions to Gemini and Notebook LM. And frankly, to my team, I tell them that, the threat that AI is going to take away jobs probably may not be real, but the threat that somebody who understands and can leverage AI will take away somebody's job who cannot understand and leverage AI is probably real for the next 2-3 years. So I think that is where we are starting to invest on.
Thank you, that helps. And Ajay, one question for you on that. So if there was one risk you believe this industry, largely chemical industry, is underestimating, right? So what should that risk be and how should we hedge it?
I think if you see one risk which is really unseen and it is being there for not only the chemical, for all the industry, the cyber security. I think that is the area I think where a lot of trust has to be given. Recent past, only in 6 months back, there was one pharma industry in India, in Bombay also itself. They were closed their operation for 6 months because their whole system was hacked. And it is a big pharma company. So you can imagine the way, and we said that, okay, we are best of the best ERP system and all systems we have. So cyber security, I think one thing which is really need to be an area where smallest to biggest industry has to look into it, because the focus area is coming into India and there are a lot of outside things that's coming into that. Digitization is one part. I think every industry is trying to digitize their processes. So I think that is the area has to be looked in very carefully to see that all the processes are set and we are like safeguarding our whole system. That is important.
Thank you. And Vineet, it's the last one in the interest of time for you, and please try to help me keep it short. So, especially for a fertilizer industry, and Koshal, if you can also pitch in there, what according to you should be one policy change that will actually not only protect, but also in a certain way disrupt the industry from how conventionally it has been looked at, and what according to you should change this year? Because right now it appears that the ministry has got a very open ear to everyone, including the GST changes that they have done. So maybe somebody is hearing you and they will accept it.
So the point is, whatsoever I'm going to say, it is long discussed, it's not new, but again, this is something who is going to bail the cat. Because I'm just taking it back. We have started this producing soya bean, I think in the 80s. And soya bean went up because government has supported it well. And once government has pushed his hand, then it went down. And nowadays we are struggling, we are thinking about how we can be self-reliant on the edible oil, but still we are way behind. The same is happening with the fertilizers, because now the time has come where it should be totally open. Now everyone has to be on his own. We are thinking that farmers are not ready to pay. We have to make them so that they can afford, because any which ways they are affording by any means, this means or that means. Because if they are getting subsidy on the fertilizer, on the other hand, they are paying GST or everything. So we have to, as in this thing country, if we want to keep this at a global level, then we have to make it free, level playing field for everyone. If we can do so, then we will be able to compete on a global front, because we are the second largest importer. We are the second largest consumer, but we don't produce. We do utilize somewhere around 70 million tons of fertilizer, and we do produce only 35, 40 million. So still there is a huge gap. We understand there is a deficiency of raw materials, but someday or other, बच्चा भी बड़ा हो गया, now he has to.
Koshal, your take, short one.
I would say, the policies, we can't do much. We as a industry, we can go and put forward our waste, right? What we should do is, what is in our control as an industry? I always say, today's time when I see, take things very seriously, very simple. When the policy says this has to be done, try and see if we can comply to the best possible manner. If we are able to do that, then our all energy and resources can be put to the value addition. Otherwise, we try and do a small fix here and then investing or spending time, which we should have done in much more productive things. This is my personal take, as a person working for a company. Take things very seriously, read the policy very, very carefully, possibly read under the line, and be prepared to comply. If we are able to do this, I think a lot is done. That's what my take is.
Thank you so much, everyone. I think it was a very interesting discussion. Not only we looked at China not being essentially a competitor always, but also an opportunity in terms of what we can learn and how we can also convert that market into an outlet for India. We also talked a very interesting piece on AI, Mitesh talked about, and truly I think the disruption that AI is going to create is not only going to be from an IT perspective, but it is also going to transform and also an opportunity for companies to leverage in terms of data analytics and more. The third thing, freight issues obviously is a perennial challenge, but I think it's also the dynamism of an Indian industry and supply chain organizations, which is constantly at it to make sure that how we are able to deleverage such risks. It was truly an honor to have all of you today participate and also share a very candid perspective on how do you look at things and your perspective on the industry. I wish you all fantastic future, not only for next month, but for the years to come. I know it's a very, very resilient industry, and that's only got proven by how you have been able to navigate these challenges. Thank you so much once again. So while Praveenji is coming up, if anyone has a question, one or two, we can always take them. We got a minute at our hand.
Any question? Sir, I have one question. See, in US Treasury or US debt, China and Japan plays a very important role. And if these two companies withdraw the money from US, I'm just talking about what will happen to the global trade shift. Because your topic talks about emerging market and global trade shift. So what will happen? Because this is one major concern with respect to the US economy of $37 trillion debt. And if these two countries, which is Japan and US, and Japan and China, if they withdraw money from the US market, what will happen?
So maybe I'll try. I'm not an expert, but of late I've been reading a little bit into this. So my view is it's not going to happen. The reason why is it not going to happen is there is a significant amount of interdependence, though politically every front would say that we don't care. But essentially, the outlet that China has today around US largely as a market, which is not only volume, but it is also extremely profitable as an opportunity across the sectors, whether we are talking about chemicals, mobile phones, or even garments, textiles, for example. So there is a significant amount of interdependence, and that also is clearly getting demonstrated that when other unfortunate countries got 50% tariffs, US is still thinking hard that what should be the sunset date for the application of that tariff on China, and it is not happening. Right? So there is a reciprocative view, which is not only from the perspective of leveraging on how much debt it is, and you're absolutely right, because if one was to pull the plug, it's not only going to cause turmoil in US, but essentially entire world, right? So I feel next few months its situation will get better when people will start learning politically how to convince each other's ego and probably settle down, and that's largely how it is looking like as of now. But happy to have view from others as well.
I think I'll echo the word what Rahul said. I think that it's not going to happen because the world economics is it's different than the geopolitical situations. So even though there are trade wars are going on, I think US or even Japan and China, you cannot be there to at least they withdraw the whole money out of the market because ultimately they see their profitability out of it. So ultimately, as soon as the time they see that okay, the profitability is there for their money, I think it'll be there. But there are a lot of dynamics that will going to happen. I think there are a lot of dynamics will change, shift the gears from the one economy center to other economy center. I think we are living in a world where I think the country focus is more important. I think India is emerging as one of the larger focus in the market. I think one basic things required for us is to have the R&D setups and more innovation of the products. I think that is where I think we are missing a lot. Even in the chemical sector, you see, even though we have a growth rate of more than I think 2-digit growth, 10%, 12% in the specialty chemicals, but still the R&D and innovation of the products are very low. I think that is the area I think we have to look into it. We are just doing a copy paste. Even you see Apple phones, we are just doing the assembly part of it, right? So that is the area I think need to do a lot. That will change our whole dynamics. And a lot of geopolitical things has been talked about, like BRICS coming into our own economy, like, okay, Indian rupees is going to be one of the trade bearers for the BRICS, this thing. So I think that is going to change.
Yeah, just to, I think, sharing from what is more real, which is, I see many more Chinese suppliers now sharing the intent to sort of do the deal in a Chinese yuan rather than a US dollar currency. So it may not happen that overnight they are going to withdraw their reserves and, do what with that. But at least they will diversify what they hold, and they will try to push as much of their own currency as possible in very subtle ways. It may not be a big bang announcement, but I see Chinese state government companies today saying that we would prefer if you do business in the Chinese yuan rather than in a US dollar currency, and probably, even Russians wanting to do business in Chinese yuan or in dirhams than US dollars. Yeah.
And that's a very interesting point, Mitesh, because so I would say there was a cover which was not written as an agreement, but somehow that cover got blown because of what has happened around tariffs. So from an intent perspective, everyone was very keen on moving on to their own currency on trade, but it was all about who will win first, and nobody wanted to do that. And now that it is a completely exposed world, everyone is saying that let's leverage an opportunity and see how we can be an alternate currency of choice. And really, for whatever history is worth looking into, for next century, I don't see a reason why dollar should be the currency of preference.
So is this good or bad?
I think the way the entire geopolitical situation is turning tables, and also how the economies are shifting from west to east, this is not new, right? I mean, if we go back several centuries, we are only turning that table again. So whether it is good or bad, I'm not sure, but I'm pretty confident that in next 50 years, this is how things will move, right? The currency situation of how the world sees today is not exactly going to be how we see it in next even 20 years. And I'll give you a very interesting example that has just come about yesterday. So Russia announced that they have already indicated within their industries that the exports from India, which is getting hit by about $80 billion, if I'm not wrong, is something that is going to open up with a preference in the Russian market. So which could be free trade, but which could also potentially be a bilateral agreement that is being reviewed right now on how we can create better opportunities for each other. And Russia, by the way, is not a small market, right? I mean, if you really look at what are the possibilities within that geography. So it is also changing a dimension in many ways, because Russia, before the war, was extremely oriented towards Europe, right? And that dynamics is also changing significantly now. So the order of how the business will be conducted in next 5 to 10 years, in my view, is going to have a very different context and tangent. And therefore, it is going to be an interesting time for Indian chemical industry, not only to saddle with the challenge of today, but really think through how should I strategize myself as a company into the new world that is already emerging out there, which is not crystal clear, but I think it's there.
I just want to add here, because first of all, we have to understand why dollar is most this thing and why westward is ruling to the eastern words. So the simple reason is because in especially in the Asian countries, we have a capacity to produce, and in western world they have capacity to consume. Though we have a major population, but still, I'm just giving one example. We have 1.4 million population, and they have only 22 crores, but they consume more edible oil than us. We consume only 6 or 7 liter per person. They consume 21 liter. And same happens with every this thing. So they have capacity to buy, they have capacity to consume. That's why we are dependent. But as Raju said, it is going to be reverse once from emerging to develop. Once we create, not only to produce, we create the capacity to consume whatsoever we are creating with the passage of time. Then it is going to be a reverse cycle. Then it is going to be very worse for Western world, because they don't have capacity to produce, and then they must be not having to consume also.
Thanks for the excellent presentation and thoughts. Just one thought in terms of China and India. So we have seen that in the last, after China opening up in December 22, the pricing for all the chemicals has actually gone for a toss. And artificially, the government has been incentivizing in terms of exports. Plus, for the future investments also, I think the finance is available at lower cost. How the Indian industry is coping up in the last couple of years, and how are we strategizing for the next future, given that it's a disproportionate advantage for the Chinese people against us, where we are just operating based on the entrepreneurs, the promoters, and the professionals who are running the show. Thank you.
So I'm actually tempted to answer that, but I'll keep it very brief and I'll actually pass it on to the panelists. So I've been extensively traveling in China in my past assignments and even now. I think there's a lot of myth around competitiveness in China and the reason why China is competitive. And most of the times we park it to the fact that government is helping a lot. I think that's not completely true. Because if you look at the businesses, especially in the chemical industry in China, I think the size and scale at which China has developed itself is naturally producing those efficiencies. There has been a significant support from government earlier on to create ecosystems, and this is something which we talked about just now, that we need to have more parks. And I sit on CII's chemical governing body, and we also have been discussing a lot around, so I will not talk about it now, but there's a lot which is being done from the ministry perspective on creating that ecosystem. The unfortunate part is it is not being executed at the speed at which we expect. I mean, when I was a kid in the chemical industry, I've been hearing a lot since then that something will happen. But I'm also pretty old now and not much has moved. So largely from the chemical industry, I think they have leveraged themselves to be strong and resilient and finding export markets. China's situation, in my opinion today, pricing is largely a factor of demand. And when you don't see significant demand domestically and also in West, naturally your outlet markets will be India, Southeast Asia, where you would tend to dump. But that dump does not come at a cost of government incentivizing them for the dump. That's not true. The challenge is they're extremely efficient. They have very, very large scales and they build for future. So there is nothing in China, when we talk to these successful entrepreneurs, they say that our philosophy around doing industry or business is not something where we can be number 10, number 20 in the global ecosystem of things. So if we are not number 1 to 3, we will not enter. So that's how it is shaping, and it's going to be a very, very interesting period globally when we see how the chemical industry is further evolving in those markets. So it is not only commodities anymore, but there's a lot of innovation happening from sustainability perspective. We're talking about green chemistry in Europe. To my mind, how I have seen it, it has probably stopped at some point because there are other troubles and problems that they have to manage. But China is far, far, far ahead if you even look at recyclability of polymers or engineering materials.
So I'll add to it, and maybe a bit practical perspective, which I was there in the month of May in China. And earlier, we were always traveling to the major cities, Beijing, Shanghai, Hangzhou. This time I went to the rural China. And I had an impression always that, same like India, the A-class cities are better and the villages are again less of infrastructure. And it changed my mindset. They have the same infrastructure in rural as they have in urban. This one. Second, one thing also I observed when I was meeting people, also visited certain factories. They have a mindset of doing things first time right, which let's accept it as us as Indian, we don't have. They will see that things happen so that they don't lose. And it becomes their way of life and they become efficient. Apart from, as Rahul said, they don't build for today. They build for tomorrow, not tomorrow, even day after tomorrow. I'll not name the product and somebody otherwise you all will know, which is not right. There was a product which I have seen purchasing, let's say $3.2 from the western side. The same product, one Chinese company, one fine day, nobody was aware that they are building the capacity. One fine day when we went to exhibition in China, we understood they started producing and they built up a capacity which is 50% of the global demand. And from 3.2, they started offering $1.36. Isn't it amazing? Feels surprising, right? It took 1 year, the West to come down to the same level. And still, they are making money. Nobody does business free of cost. They still make money. So this is how, in my view, they think. And we should learn from it. Frankly speaking, as a country, as a generation, we should learn from it. Nothing wrong in learning from it, right? Why don't we take advantage of what they are doing better? Let's take advantage. And then let's build on where we are better. We are also better in several places, several things, right? When India started thinking of the defense sector, you see it is evolving. It will take time, but it will evolve for sure. You never know, one fine day will be self-dependent. So let's look at situations where we are better, let's start building on. And if something is available, why don't we use it? And as Ajay was saying, still we as as human, I'll say here in India, we still don't believe too much in investing on innovation. You know, in the previous session, somebody was talking about when it is EHS, why we are talking about the cost escalation? Because we don't look at long picture. See, there had been cases where if we invest to improve safety, take an example, you spend say 25, 30 paisa more. There are two ways. Either do somewhere else better and recover that money, or should have guts to go and tell customer that can you pay me for this. So these two situations we have to work upon. And it is possible, I am telling you. It is possible. And many a times we shouldn't look at just the tangible benefit. Because, you know, when you talk about digitization, how many of us are receiving business cases and the ROI is available? There is hardly any ROI. Okay? You can't calculate. We say, I am going to reduce 5 people and their cost is what 10, 20 lakhs rupees and the investment is 2 crore rupees. We cannot, because the benefit of that cannot be counted today in pennies. It is in long run, and that is what where, when you talk about culture of safety, when you talk about digital journey, it is never bottoms up, it is top down. Because they look at picture 10 year, 15 year down the line, not today. So I think we need to look in this perspective, and this is how he was telling that, you know, we are still, since people say 200 year, we are still talking, we are developing, and somebody is developed 200 years before. It is all about mindset change. And I love this topic of safety being into chemical industry. You know, there are two things which I have always understood. Very interesting. Huh? One, very, very difficult to improve the behavioral safety. Very difficult. Huh? Second, we look at engineering control. Many times we keep on training. We know it cannot change. But we other side know that some engineering control will bring the efficiency or improvement in safety, but it would need some money. Why don't we invest? So it is all about taking decisions, understanding all the aspect of it. If you do one thing wrong 10 times, my thought is, we should think, how do I do it differently? In place of trying and correcting it to 11th time. So I think this is all which we have to improve. We should learn from these people. Especially the Northeast Asia, you know, they are super efficient, I'm telling you. Whoever I have seen, I was always a kind of amazed to see these guys. And that's a behavioral change which you need to bring in. And let's leverage to what strength we have versus what strength others have. Thank you.
Just want to add here, because I think we should not underrate ourselves. Because what we are comparing today's China with only 70, 75 years old India. Okay. Just compare China, what they were before 30 years. And whatsoever we are doing, the pace we are doing, so it is only matter of time. And whatsoever we are talking about, this change of mindset, this is a phenomenon cycle. Because initially it comes with your basic needs. सबसे पहले तो खाना चाहिए ना. And then it comes with your social need. मेरे पड़ोसी को मेरे को जानना चाहिए. Then it comes superficial needs. So still we as a country in a phase where we are on a mass level, we are fulfilling basic needs and social needs. And as we grow, then definitely our cycle is going to be much lesser than theirs. And it itself showing if we are talking, we are just taking what they are doing, why not we? It took them how many years, after how many years they have created this Apple facility. I think when Tim Cook has taken over, because he was the CPO, and his vision was how I can control my cost. And in India, only 2 years, you reach at a highest level of production. So this is not, we are far behind. Yes, we are. We should accept where we are, and we are clear where we want to reach. We will.
Yeah, interesting. You rightly said, Mr. Tikoo, that this session would be very much interesting, and I don't think even a single person has left, including me. Okay. Now, having said that, on the serious note, what Mr. Mitesh said, you talked about polymer recycling. So even in polymer sustainability and recycling, India is moving at a much faster rate at what China did. Just to give you an example, just to lift the mood that we are this thing. So we are not only doing mechanical recycling of plastics, but even the chemical recycling of textiles. We have already a company who have established those processes, pre-consumer, not post-consumer. So in a way, India is moving much faster and maybe things will change for better.
And I think my view is absolutely aligned with yours. There's no doubt that there are a lot of things which are changing, and that is the reason when we started as well. I mean, if you see the economy which is going to multiply by 5 times in about 15 years, China is not going to do that, right? Because there's a little bit of a maturity in every index that is having. What we are talking about is the size and the scale of the industry, and when you have a size and scale, you also have opportunities to leverage into many other things that you can do. But contextually, an organization has to first mentally be free from a problem which is called growth, right? When you are free from that, you can start working on many other things. But absolutely echo what you said, that there's phenomenal amount of work that Indian chemical industry is already doing, and we don't see anything stopping that future.